Picture this. You wake up Tuesday morning, pour your coffee, and check your phone to see $247 deposited overnight while you slept. No boss, no alarm clock, no commute. Just your money working for you. Sound too good to be true? Well, thousands of Americans are already doing this, and today I'm going to show you exactly how much you need invested to make it happen. Now, before you think this is some get-rich-quick scheme, let me be crystal clear. This isn't about day trading or crypto. This is about something your grandparents understood, but Wall Street doesn't want you to focus on: dividend investing. And here's what's crazy. Most financial advisors will tell you to save $2 million for retirement, but you might need way less than that if you understand what I'm about to show you. But here's the thing that shocked me when I first ran these numbers. The amount you actually need depends on one critical factor that most people completely overlook. And if you get this wrong, you could end up working 10 years longer than necessary. So stick with me, because in the next few minutes, I'm going to break down the exact numbers, show you real examples, and give you a simple formula you can use tonight to figure out your personal dividend freedom number. Let's start with the golden question. How much do you actually need to live comfortably? Now, I'm not talking about eating ramen noodles in a studio apartment. I'm talking about maintaining your current lifestyle, maybe even upgrading it a little. According to the Association of Superannuation Funds, which does the gold standard research on this stuff, a single person needs about $54,000 a year for a comfortable retirement. That means private health insurance, running a car, taking a vacation, going out to dinner without checking your bank account first. For couples, you're looking at around $77,000 annually. Now, here's where it gets interesting, and this is that critical factor I mentioned earlier. Not all dividend yields are created equal. See, when most people hear 4% dividend yield, they think that's what they're getting. But here's what they're missing, and this is huge. Taxes eat into everything. However, there's something special about dividend investing that can actually work in your favor. Many dividend-paying companies have already paid corporate taxes on their profits before they distribute them to you. Plus, qualified dividends get special tax treatment. They're taxed at capital gains rates, not ordinary income rates. For many retirees, this means paying 15% or even 0% on dividend income instead of your regular tax rate. But let's get to the real numbers you came here for. If you want $50,000 a year in dividend income, and you can build a portfolio yielding 4% annually, you need $1.25 million invested. Want $75,000? You need $1.875 million? For that comfortable $54,000 we talked about earlier, you're looking at $1.35 million. Now, before you think, I'll never save that much, hold on. Because there's something most people don't consider. You don't have to save every penny from scratch. This is where the magic of compound growth comes in. If you're 45 years old and you invest $2,000 per month into a diversified dividend portfolio averaging 8% total returns, which is actually below the historical average, you'll hit that $1.35 million by age 65. Start at 35, you only need to invest $1,200 per month. The earlier you start, the less you need to contribute because time does the heavy lifting for you. But here's what nobody talks about, and this could save you years of extra work. The biggest mistake people make is chasing the highest dividend yields. I see this all the time. Someone finds a stock paying 8% or 10% and thinks they've struck gold. But here's the reality. If it sounds too good to be true, it probably is. Companies paying extremely high dividends are often in trouble. Either their stock price has crashed because the business is failing, or they're paying out more than they can afford and the dividend is about to get cut. When that happens, not only do you lose the income, but the stock price usually drops even further. The sweet spot? Look for companies paying 3% to 6% that have a history of growing their dividends over time. Think companies like Coca-Cola, which has increased its dividend for 60 consecutive years. Or Johnson & Johnson, which has raised its dividend annually for 59 years straight. These aren't the most exciting stocks, but they're wealth builders. And here's why dividend growth is so powerful. Let's say you buy a stock yielding 4% today. If that company increases its dividend by just 5% per year, which many quality companies do, in 10 years, you'll be earning 6.5% on your original investment. In 20 years, that 4% yield becomes 10.6%, on your original cost. This is how you build real wealth that keeps pace with inflation and actually grows your purchasing power over time. Now, let me show you the easiest way to get started without picking individual stocks. Dividend ETFs do all the heavy lifting for you. Something like the Vanguard Dividend Appreciation ETF holds over 200 dividend-growing companies. You get instant diversification, professional management, and you can start with as little as $100. The Schwab U.S. Dividend Equity ETF focuses on high-quality dividend payers and currently yields around 3.5%. iShares Core Dividend Growth ETF targets companies with strong dividend growth histories. These funds take the guesswork out of building a dividend portfolio. But here's something crucial that could make or break your strategy. When you receive those dividend payments, matters. Most people just let the money sit in their account, but that's leaving money on the table. During your accumulation phase, while you're still building wealth, you want to reinvest every dividend back into more shares. This creates a snowball effect. Your shares pay dividends, those dividends buy more shares, and those new shares pay more dividends. By the time you're ready to live off the income, your portfolio is producing dramatically more than if you'd been spending the dividends along the way. Here's a real example. $100,000 invested in dividend stocks, yielding 4% with 6% annual dividend growth. If you spend the dividends each year, after 20 years you have $100,000 and you're receiving $4,000 annually. But if you reinvest those dividends, after 20 years you have $320,000 and you're receiving $12,800 annually. That's the power of compounding. Now, there's one more thing you need to know, and this is critical for your success. Inflation is the silent killer of retirement income. If you need $50,000 today, you'll need about $67,000 in 10 years and $90,000 in 20 years, assuming 3% inflation. This is why dividend growth is so important. Quality companies don't just pay dividends, they increase them faster than inflation. The big banks have grown their dividends roughly 4% to 5% per year over decades. Utilities, consumer staples, healthcare companies, they all tend to raise dividends annually. This is how a dividend portfolio keeps you free. Your income grows automatically, usually faster than your expenses. Let me give you one final strategy that can accelerate your timeline. Consider using tax-advantaged accounts strategically. Hold your dividend stocks in a Roth IRA if you can. All that income will be tax-free in retirement. If you're over 50, you can contribute $7,000 annually to a Roth IRA plus catch-up contributions. For your 401k, if your employer offers dividend-focused funds, max out your contributions. The tax savings now plus tax-deferred growth can shave years off your timeline. So let's bring this all together with your action plan. First, calculate your target number. Take your desired annual income and divide by 0.04. That's your goal. Second, start investing consistently. Even $500 per month makes a huge difference over time. Third, focus on quality dividend growers, not just high yields. Fourth, reinvest everything until you're ready to live off the income. And remember, this isn't just about the money, it's about freedom. Freedom to spend time with family, pursue hobbies, travel, or just sleep in on Tuesday morning, knowing your money is working while you rest. The best time to start was 20 years ago. The second best time is today. If this video helped you understand how dividend investing could change your retirement, hit that like button. It really helps the channel reach more people who need this information. Subscribe if you want more practical retirement strategies, and leave a comment below telling me what your dividend freedom number is. And if you know someone who's worried about retirement income, share this video with them. It might just change their financial future. Your future self will thank you for taking action today.